Welcome to Late Night Stocks. Q3 earnings season is starting, and it starts with banks, with JPM Morgan, for example. Maybe you're considering buying them or saying they are undervalued because we had a huge rally since beginning of this year. To understand this stock price action, we need to understand first is tapering and rate hikes because we're expecting tapering at the end of this year, and this rate hikes starting in the second half of 2022. We need to understand first what can be the effect of these moves by Fed to banks' stock prices. We had actually example in the past. If you go back to this 2008 recession, after that we had this quantitative easing by Fed and until 2014, and afterwards we had tapering and the rate hikes. So if you check the stock price of JP Morgan in these timelines, then we can understand better so that we can expect we can have a better expectations about this until this year and the next year about the JP Morgan stock price. So let's start from basics of this macroeconomics to understand the situation better. So Fed's monetary policy is aimed at three goals: maximum employment, stable prices, in other words, low inflation, and moderate long-term interest rates. To reach these goals, Fed has some tools to manage the health of the economy, such as buying the asset securities from the banks, so that banks can loan more money to private companies, to people. Then we can see more investments in the private sector that can decrease the unemployment and regulate the inflation. But what is tapering? So tapering means that it doesn't mean actually selling the assets that Fed bought, but it means they lower their purchases. So let's say Fed purchases $80 billion monthly, these securities, and they decrease it to $40 billion per month. This is called tapering, so that it slowly slows down the economy without any sharp movement to find the balance. So Fed used actually this tool before. If you go to this Great Recession, in other words, this 2008 crisis, afterwards, Fed Chairman Ben Bernanke started this quantitative easing (QE) packages, and the second package come until 2014. So they boost the money, they bought the securities, the asset purchases, and so on to relieve the banks and boost the economy with giving the loans to private companies. And in 2014, in the beginning in January till October, they began slowing its pace of buying assets. In other words, they did tapering. After this tapering, they increased the rates. Here in this example, you see that at the end of 2015, they first increased this rate to 0.4%, and especially after 2016, we had consecutive rate increases until 2019, and maybe they overshoot and made a little bit aggressively, and they pulled back the rate to 1.6. Maybe this was the sweet spot for the interest rates, 1.6%. But what was the effect of this on JP Morgan's stock price? Let's have a look at together. Here you see the JP Morgan's stock price. So here you see that the blue lines show that the rate increases by Fed. As I just said to you before, that in 2014 we had tapering. As you see, the stock price and the purple line showing the S&P 500 was like flat, a little bit increasing, but not much happening. But afterwards, in 2015, end of 2015, we had the first rate hike, but this was not that highly effective on the stock price, neither S&P 500. But when we see this consecutive the rate hikes in a row, then we see this correlation. As you see, the S&P 500 was not doing very well, but stock price of banks were going up huge, especially until this 1.6% rate hike. That was maybe the sweet spot. Then they see the all-time high, and after this 1.6, after this we had 3 rate hikes, and that caused bank stocks to fall. Okay, then we Fed realized that they increased rates a lot, and they decided to lower the rates. When we see this orange line again, 1.6%, then bank stocks, for example, JP Morgan, see the all-time high. So it looks like the 1.6% is very good to banks, good for banks to make profitable and to increase their revenues. Now, when we look at the JP Morgan's earnings over the years, JP Morgan's earnings, here you see the quarterly revenues over the years, it was also stable, going up very steadily. Then we see in 2020, it is, as you know, the pandemic, we had a huge decrease. Now we are going back to all-time highs in terms of revenue quarterly. We saw a peak. Now we are decreasing. Maybe this was the best case. Maybe we will see some slowdown. But what can be the cause of this slowdown? When we look at some articles, the Wall Street expectations, as you know, this week the banks like JP Morgan, Goldman Sachs, Citibank, and Bank of America will publish their Q3 earnings. Now we're talking about that these earnings are under pressure by ballooning costs, this rising pay and heavy spending on technology to compete with fintech challenges, and the fees from the wealth management, return of credit card fees can be a pressure for this earning, can be pressure for the profitability. We already had a huge rally since the beginning of the year. Maybe we can expect some correction, because as we saw in the chart, the tapering is not good for bank, for the stock price, but rate hikes is really good for the bank. And as you see, the revenues are expectations here. JP Morgan and Bank of America bringing the highest revenues in billions in the America. Maybe we should wait a little bit until 2022 to see these rate hikes. Then we can maybe start to see the second rally of the bank stocks, because here you see the JP Morgan stock price since beginning of the year. Here you see the performance of the S&P under the purple line, the JP Morgan stock prices doubled. So when we look at this Fibonacci levels, if we see a correction, we may go back to $150 level. But if we see a huge beat, then we may even go up to $190 level. It is better to wait and see, in my opinion, because when we see these huge rallies, then people take their profits and people may realize their profits, and we may see a correction, because also at the same time S&P 500 is not in the best shape. So I hope you enjoyed this general macroeconomic discussion. I also enjoyed myself looking at the back what happened there. Let me know in the comments down below if you have any bank stocks in your portfolio. Would you consider buying them more? Don't forget to give a like, subscribe to our channel. See you in the next videos.